is Friday, and you can say GIF if you're one of those people working for the weekend, right? And if you're not, if you're a trader, if you work anytime that you feel like or that you need to, well, it's Friday. What's happening in the world of crypto? Well, we saw that yesterday, just as I said here on this channel. There was a high probability that the day was looking to finish to the upside, and it did for a lot of assets. Not massively or anything, but it ended to the upside. Now, what is the volatility looking like today? Well, if you look at Bitcoin and Solana and Litecoin and a whole bunch of other leading assets in the space, you'll see a nice mixture of information. A bunch of it is leaning a little bit to the downside, and some of it is actually leaning to the upside. And we're seeing on lower time frames, and this is why we trade lower time frames, some nice movements to the upside. Why? Well, because the returns are heading to the upside, positively correlated, right? Because the standard deviations of returns are heading towards or are indicating that the movement will be up, right? Either because they have high volatility and the correlation is also high and they're continuing in that direction, or because in some cases they have relatively high volatility, but the correlation is also positive, and even though it's not high, it is increasing. A few other cases you are starting to see some relatively high volatility starting to contract, and the correlation is also either contracting or, so you're seeing some movement to the upside on the lower time frames. But again, keep in mind on those higher time frames, it is Friday. And that does mean it is the last day of the traditional markets work week for stocks and other assets that only trade through Friday and then take the weekend off. So we're seeing basically Bitcoin and Solana, like Litecoin, a whole bunch of meme coins, all those kind of things have had actually some very nice moves to the upside today. I saw Bonk already moved, just as an example of a meme coin, more than like 3 or 3.5% already on the day, which really is a very nice day for most people, right? For most traders, in fact, pretty much any trader who's a serious trader, if you're making 3.5% in a day, heck, if you're making 1% in a day on every day, you are killing it. You are crushing the competition of traders on the markets. Why? Because most people don't make 1% a day every day, right? And so if you're a low time frame trader and you manage to rack up already more than 1% on like Bonk or whatever, you could say you're done for the day if you're in most people's shoes, right? 2%, fantastic. If you hit more than that, even better. You don't need these 7%, 10%, 20% days. While it's nice to have them, like it's really nice to have them, right? If you're trading with no leverage and you're still making more than 1% a day in gains, just do the math, right? Take whatever it is that you have in your trading account, do the math and compound 1% a day every day for a year. It will blow you away, right? It's not a 365% gain because it's compounded, right? 1% of what you have that day adds up, and tomorrow you have an additional 1% of that new what you have that day, right? That new stack, and then the next day 1% of that stack, and so on and so forth. after 100 days already, you've more than grown your position by 100%. Far more, right? After 200 days, you've grown it far more than 200%. And after 300 days, way more than 300%. After 365 days, I mean, these are numbers dreams are made of for a lot of people. And I'm talking about if you have a small account to start with. Okay? So when you see these gurus, supposed gurus of trading, shilling you voodoo TA and telling you make 10% a day or make 5% a day every day, they're full of it. Okay, most traders do not make 5% a day, especially not if they're using voodoo TA. Okay, they're lucky to be making anything if they're using voodoo TA. In fact, they're usually losing money. Okay, the vast overwhelming majority of traders lose money and get wrecked because they have horrible risk management. They just have horrible risk management, number one. So they'll over leverage their position. They'll take a 5, 10, 20x, 30x position. They'll even do 50x. Sometimes the crazy ones will do. There's a bunch of them I know, and they seem smart and everything, and they're rich, usually because they're from rich families. And they bet 100x on what they think are low time frame positions, and in many cases they are. But those people usually end up getting wrecked, and they end up losing their bag. And depending on how much capital they have access to, usually within 90 days, they're done with trading. Now, I do know some exceptions to that rule, okay? I know some people who do trade 100x, who do come from rich families, but who do successfully make money trading. Mild interruption. So, when people take out insane positions and they, of all things, try to swing trade those positions, and yes, I know some voodoo TA traders who do take crazy positions of like 100x, but they typically finish their positions or close their positions within 1, 2, or 3 minutes. Very rarely do they go much longer than that. Maybe 10 minutes, 15 minutes in some cases. And they're relatively successful taking insane positions like that. But the only reason they could really afford to take such a risk is because they have basically unlimited cash available to them. So even if they lose $10,000 on a trade in a 3-minute position, they don't care. They just put another 10,000 on the next trade and another one on the next trade. I'm talking about people who, for them, a bad day is making less than $1 million in profit. Okay, like seriously. And there are people like that, but they are extremely rare. Okay, and they're not usually good because of their technical analysis. Okay? It's usually their technical analysis that misleads them. Usually what happens is they lose money on the trades if they use their voodoo TA to try to analyze what the asset will do. And usually what happens is they take an obvious trade that you don't even need any technical analysis to take, and they just either long it or short it with crazy high leverage, and they have very good risk management, meaning if the trade goes against them, they get out because they're trading 100x leverage. So it doesn't have to move very far for them to get out, right? They're going to lose that position if they don't get out immediately. And they actually use stop losses, so they lose a lot of trades, right? But that's because if they don't, they're going to lose 10 grand, 100 grand on a single trade inside of 2 minutes or a minute, which is crazy dangerous unless you are, from a family that has hundreds of millions of dollars and you literally don't care about money. And there are people, they care about it, but they don't care if they make a $500,000 here, $500,000 there. It's like It's cute to them, but it's not massive amounts of money like it would be to most people. So again, don't trade the Voodoo TA. Don't put yourself in crazy risk you can't afford to lose, right? Limit your losses. Take your profits early and often. You know, learn to manage your risk. Above all else, manage your risk. Risk management is the key to trading. It's the number one thing. It is the bulk, overwhelming majority of all aspects of trading. It's risk management. So do your risk management a favor, manage it properly. And then make sure you follow the 3 simple rules to do that, right? To do that consistently and profitably, which is 1, take your profits early and often. Number 2, limit your loss. So if a trade moves against you, just get out. Even if you're in a profitable trade, if you see it starting to turn against you, just get out. Who cares if you miss more of the upside or the downside? Who cares? You'll just get in the next trade, the next obvious trade. And number 3 is don't be emotionally attached to your trades. Okay? If you trade about something that you care about emotionally while you're in the trade, you need to stop trading that. Trade about something you don't care about emotionally while you're in the trade. I don't care if you care about it when you're outside the trade. But if you're in the trade and you care about it, you're trading the wrong thing. You need to trade things that while you're trading them, at least, you don't care which way the price goes because it doesn't matter. As a low time frame trader, it does not matter. What matters to low time frame traders is winning the vast overwhelming majority of your trades and having them be profitable trades, not flat or negative. So there you go. How do you learn to do that? Well, you can learn for free to do that by going to the Alpha Trading Discord, which is at alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And you can get free access to our volatility starter pack. Just go into the request support channel, click the create ticket button, and literally request support. Tell us you want the free volatility starter pack. You want access to it, and just tell us your TradingView username so we can hook you up with the indicators. That's it. It's free. You get a free chart, you get free education, free chat channels to talk with other traders, access to the live stream where you can participate by your voice as well as by text chat. So there you go. I'll talk to you guys later. Happy trading. Take Brawley.